right. Well, we're back for the December economic update. I'm John Cleaver. With me, as always,
Dennis Bacon, Chief Investment Officer, Beyond Wealth Advisors.
Well, believe it or not, we're at the end of the year.
I know. It's
very
amazing.
Close to the end of the year. And coming off kind of a high note, November was a great month for both stocks and bonds. That's a nice little change of direction.
Nice change,
The Fed actually paused in October and raising interest rates. Maybe that had something to do with it.
Probably.
And so how would you describe this kind of broad recovery in the markets in the month of November?
Well, I think broad is the optimal word there. It's been one of the broadest rallies we've seen in quite some time. Not only broad in the U.S. across all the different spectrums, small cap, mid cap, large cap, different sectors. All the energy sector was down last month, but it's been the leader for the last year, so that would be expected. But even across the globe, the average was over 9% globally. Europe led the way at almost 11% return. That hasn't happened in years. Japan was up over 8%. The emerging markets were even up around 8%, while the U.S. Sit there somewhere in the mid 8% range also. So it was pretty broad and pretty equal. The same thing can be said for the bond markets. Now, interest rates dropped a little bit. I think the 10-year Treasury at the beginning of the month was down to 4.2 roughly. It was up to 4.78, over 5 at one point in time. So that's kind of a stabilizing thing. I don't see it dropping a lot more from there. But bonds made anywhere from 3.5% to 6.5%, which was solid return, and that's mainly because of the deterioration of the interest rates. So that's good. The question is are they going to continue to raise? Are they going to lower? Or what are they going to do? That's kind of the messaging from the Fed Governor Powell sounded like they might be through, but there's also, he put some things in there that said they might not be through. So there's a lot of discussion on where that is. But the markets seem to think that they're through raising interest rates for this period, which means the next phase, whether it's in 3 months or a year and a half, is for them to lower interest rates. That would be the next cycle that we would anticipate.
Right, absolutely. Well, one of the other areas that's kind of been topic of discussion is if we're going to have a recession, we got to have some unemployment. Typically, we have seen unemployment tick up just a little bit, maybe like 3.9% on the jobless claims. Core CPI, though, is at 4%. Manufacturing slowing down a little bit. So what does all this tell you about what's the effect of what they've been doing?
Well, it sounds like the effect has been pretty good. The manufacturing situation is across the world. I think China's slightly positive. Everybody else is well in the negative territory. The unemployment rate has went from, I think we were down as low as 3.4 to 3.9. I had said a long time ago we hit 4.5. We're probably going to have, that's going to be recessionary territory. So we're headed towards that. But the core inflation rate pretty stabilized around 4. Remember, their target is 2. Personally, I think anywhere below 3 or around 3 is really optimal. I disagree with them, but not the first time I've disagreed with the federal agency.
Did they ask for your opinion?
They did not ask for my opinion, so it doesn't really matter. So I see all that, that it's kind of a situation where I think a soft landing may be there. Some of the economists I follow agree with that. Some that I follow totally disagree with that. So we're really just not sure where that'll go. So,
well, you mentioned the R word, the recession word, which we've been talking about most of this year, and thinking that that's still maybe in the cards to some degree. So, with where we're at today, what do you think?
Recession?
Yeah.
I expect we'll have a technical recession. And what I mean by that is the numbers, we'll have a couple of quarters where we actually have slow to negative growth. I don't expect that to be long lasting. I expect it to be relatively mild. I think for most people, it's going to be relatively unnoticeable from where we are today. I know a lot of places in the country are not in great condition, so we're not super great, but there are a lot of places from a market standpoint, everything looks real good. I think the backdrop of all of this growth we have had in the last year, the recovery we've had, AI, all of that type of stuff that is propelling the market forward will continue to be in play and will probably overcome the slowdown in the economy, which is a natural thing that happens periodically anyway.
Absolutely.
And so I think businesses are finding ways to become profitable, new ways to become profitable. And I think from a market investment standpoint, that will outweigh a slowing down economy.
Absolutely. Well, that's fantastic. And I think on that, maybe that we'll end on some good news. And speaking of some good news,
well, we're going to have some changes.
Right.
That may be good. It may be not. I don't know. But I'm kind of stepping back at the end of the year. Still going to be involved. Still working with the economy, but stepping back from an operations standpoint in our practice.
Right.
And won't be here on a day-to-day basis. There's an R word that people call that. We won't use that today because it's not totally in play. But I will be kind of moving to another phase while still participating with a lot of the guidance and everything on the economic front here.
So what you're saying is going forward, it might be more of a guest cameo appearance?
I don't know. That's up to you. John gets to make those decisions going forward. Wow. But no, it's kind of an exciting time for the business and everything. We've been working towards this transition for about 5 years. So this is nothing new or nothing. No real big changes in reality.
Well, we're certainly been blessed and honored to be on this journey with you for all these years. And as it relates to the economic updates, I'm sure we'll continue to tap into, as you like to say, your experiential wisdom. And,
I say experiential, you say wisdom. I don't know about that.
We'll count both of them. So with that, that's a wrap. And you hope you have a very Merry Christmas, and we'll see you next year.
And have a Happy New Year.
Absolutely.